What's going on, everybody? So let's take a look at the S&P 500. So the SPY had a very nice bounce on Friday, along with the triple Qs, along with the NASDAQ 100, along with a lot of stocks that we all love. Really kind of just leading that charge was Apple. After those earnings, Apple kind of surged in the after hours, confirmed those after hours highs, and Apple pretty much closed up $11 on the day, closing at $170.33, which really brought a lot of the mega cap and a lot of the tech stocks up. So with that being said, we're going to take a look at the S&P 500, and we're going to kind of go over a few time frames. We're going to look at the daily chart, we're going to look at the 1 hour, and we're going to look at the 5-minute time frames. With that being said, can we clearly say that this is a bottom? Okay, can we clearly say that the selling is over? Absolutely not. If you're listening to anyone out there that's telling you, hey, this is the bottom, load up everything, because we're never going to see these levels again, I would suggest highly to stop listening to those people, and in fact delete them from whatever social media source that you're looking at. That's wherever outlet that you're getting that information from, I would highly stay away. Now, with that being said, am I a bear? Do I think that we're going lower? Absolutely not. Am I a bull? Do I think that we can go higher? Yeah, that's a possibility, but I don't think that I'm not going to sit here and tell you that, hey, the selling's over, load up all your cash into this bottom here, and then lo and behold, 1-2 weeks later, we're sitting at lower lows. So with that being said, fantastic work that the bulls did. We could entirely be looking at, another week of a dead cat bounce until we really start reclaiming the 5-day moving average, the 10-day moving average, back testing that holding, reclaim the 50, reclaim the 200-day moving average on the triple Qs. We can't really say that we're going higher, but what is good is it's setting up opportunities to potentially trade and scalp some of these bounces higher. So we know what's been going already in the big picture. We've been selling off now for what seems like years, but it's going back a couple of months. Really, all of January just getting hit tremendously hard. So what I'm going to start off here is I got a couple of demand and supply zones here. You can see upper supply is going to be in this range between $443 and $447 on the upper range here on the S&P 500. Currently, we're sitting at $441.95. And then we can see this bottom demand zone here in a range between 420 and 428. Now, why I have that range is due to the fact that when we had that nasty sell-off, that nasty push on Monday, and then we seen the complete reversal on Monday to actually close green on the day's session, which was, astonishing in itself. But with that being said, that kind of marked our bottom. Okay, that marked our short-term bottom for the week. Now, could we go lower? It's entirely possible. Could we hold this level and start to work and maneuver our way upward? That's also entirely possible. So with that being said, this is going to be our line in the sand down here at around $420. This is going to be our demand zone here. Why? Because each and every single day of last week's sessions, not only did we tag this level, but we tagged and held. We tagged and held. We tagged and held. We tagged and held. Tuesday, Wednesday, Thursday, Friday, we came into this demand zone. We know that there's buyers sitting in that area between 420 and 428. That area is crucial as of right now, current time, current day, heading into February. This is our demand zone where we know buyers are comfortable stepping in here. Now, I'm not going to be sell biased or short biased, on a swinging basis until we lose that zone. When the bulls show that they lose that zone and we can no longer defend this area here that has acted as an area of support, and we start to break down, now this is a potential short opportunity for whatever particular stock that you're looking at, or even shorting the triple Qs or the SPY. With that being said, I am looking for this week to kind of continue that rally. We are coming up into a level of supply. With that being said, we can look back here on the 21st of January. We were in this zone. When we lost this zone, this is where we kind of traded along sideways. So we also tested this range on the 26th, which was Wednesday. We kind of came up close to that range on Thursday, and then we kind of closed just right at it on Friday. So be very cautious as this week starts. We could come into this supply zone between 443, 442, and 447, completely chop around here, which is not necessarily going to be a bad thing. But if we do get stuck in between this 4 or 5 point range, channels could contract, meaning that the ranges are not going to be as volatile as they have been in the past couple of weeks, meaning that, instead of those, 10, 20 point from top to bottom intraday moves, maybe they're shrinking up 7 to 8%, $7 to $8. Maybe they're $10. Maybe they're $5. So with that being said, just stay a little bit cautious. It's until we can break out of this zone here. We need to get a clear break out of this zone. Then we do need to pull back into the zone. And when we can hold this and consolidate and push out higher, that second time is when you're going to want to start to get long. And potentially this is where you could actually start thinking about loading up and starting to nibble on some longer positions here. Because obviously we know if we were to lose this zone again, we're going to exit our positions because we do have that demand zone that's down here in that 420 to 428 range. Now, if we do Monday or Tuesday come into this zone, quickly reject this zone, say 1-2 days, we kind of wick in this area, but we cannot hold, you could potentially look for a short scalp position on a day trading from a day trading time frame, maybe a potential scalp. If we come in this area and we lose this area and then you start to see the market sell off for that day, that's going to act as a rejection day. Maybe we start trending down. However, as long as we can get into this zone, get above, hold, I think that we can see the markets push higher. So let's just kind of get into some smaller time frames here so we could talk about some potential trades that we can set up for this week on the S&P 500. So if we kind of look at the hourly time frame here on the S&P 500, you'll see that supply and demand zone a lot more clean. So you can see here on Monday, we kind of pushed down and washed out here. We had this nice little hammer candle followed by, just a spectacular day on Monday. Came into this demand zone once, came up to the top of the range here, quickly was rejected, came all the way back down and back into demand. And as we came into this demand here, buyers stepped in once again and we rallied, we sold off. Back into demand, we pushed higher into supply. What happened when we came into supply? We got rejected once again. You could take a short position here, and then where would you want to cover? So for example, if you're looking to play the range here, you're looking to take a short position into supply and you're looking to cover into demand. That's the way that it works. If you're looking for a long position, you're looking to consolidate and you're looking to accumulate your position down here in demand and you're looking to sell into supply. That's just the way that it works. Until we can break out of the supply zone, come back in, test this, and move out, that's when you can have confidence going long coming out of this zone. Just like if we were to come all the way down here and lose this demand, we would need to lose the demand, come back into the zone, and then fail, and then start making lower, and then you can start to take your short positions here, just as long as we don't get out of this demand zone. So with that being said, taking a look at how we traded last week, we pretty much ended where we started. We came down to demand, up to supply, down to demand, up to supply, and we pretty much just traded, range bound for the whole week. Now, just because we were range bound doesn't mean that there was no areas of opportunity for taking long positions or short positions. There's plenty of opportunities where we could have made money here. We could have made money here. We could make money here. And definitely on Friday, I did catch a couple of longs coming out of this demand zone as we started to push higher. We did consolidate sideways on Friday. And then when we really, that last hour of the day, when we broke through Friday's consolidation here, was when everything really started to run higher. So with that being said, if we take a look at a smaller time frame, like the 5-minute time frame, you can see exactly where we're at. We are coming into this level. We are coming into this level of supply that we need to be careful of, because every time over the last week that we've kind of come up into this area of supply, we've been rejected, and then we've come back down either to the middle of the range or all the way back down into the demand zone. So what I would be looking for here coming into this week's session is this, okay? So if we take a look at Friday's price action on the 5-minute time frame, you can see here right off of the bell, we made this nice push higher, okay, into the pre-market, and then we got rejected here. We started to sell off, but knowing that we have our demand zone here, we're really not looking to short this sell-off just due to the fact that we know buyers are going to step in when we get to this price action here. Buyers stepped in. We started to push up higher into these pre-market highs and opening range highs here. When we really got above it and we broke that little level of daily resistance is when we really went on a run. So when we went on this run here, we started to consolidate sideways and started to find a little bit of intraday resistance here. So as we made this new high here, I kind of marked this trend line to show this is the day's new high. This is where we got rejected, and we're trying to consolidate. The market is trying to figure out what it wants to do. Just being that we're above demand and underneath supply, there's really not a trade here until you either see us start to break down back towards demand. You could take a scalp position back into demand, or until we break out of this day's consolidation in these days highs. When we really broke the day's highs at around 12:30 Pacific Standard Time here, we really went on a 30-minute run just into the close. Just algos on, pure buying. This is what you want to see going into the next week. Typically, when we have this kind of price action, it kind of spills over into that Monday, Tuesday. So what I would be looking for here, if you're a bull looking for that long play, what you would actually like to see is a down, flat, or red open. And what we want to see here is a sell-off into this 437, 459 zone. Even if we crack into supply here, chop around and lose this area, there's a potential for a scalp depending on how you trade. Everyone is different. If you're not a scalper and you're not a day trader and you're just comfortable going long, this is not the play for you. However, if you're a scalper and you don't care whether you're going long or short, if we come into supply, get rejected, and lose this area, you could take a short position here and look to cover at 437.59, which was the previous resistance. I can see the S&P coming into this area, finding a little bit of weakness, and then selling off into this 437 and holding. Okay. If we do this, this is fantastic. And this is what you want to see for the bulls. The bulls are going to want to see this level hold, and then we're going to want to see us start to curl around. And as we curl around, this is when potentially you can take a good risk to reward trade here using 437 as your stop and looking to ride this back into 442 into the supply zone. Now, if we do have some sort of weak, long, dead cat bounce and we actually make it out of this supply, come back in, back test it, and now hold, then we would be looking for price action to go higher. Okay. But if we do come into supply, let's say we have a green open or a big gap up on Monday, I would not look to take a long position here just due to the risk to reward ratio is not going to be that good, because we know that if we do want to take price action down and test support, we will be coming down to 437. And if we cannot hold that, we could potentially come down to 433, which was also that pre-market opening range high on Friday. Now, if we chop around and we lose this zone, then obviously, you know, we do come into our final demand zone here that we've so happened to just bounce out of the whole week. This is going to be our strongest level of support between 420, 421, and 428. Now, obviously, if we were to lose 420, then we know that potentially we are going to go deeper into a bear market or a correction zone territory. So I'm just kind of giving you guys a few areas of opportunity where we could potentially play this intraday. What I personally would look for here is I would look for some sort of down or gap down open, maybe a red open, or maybe just a flush off of the opening bell, maybe that first 30 minutes to an hour, kind of wash out here and then kind of consolidate sideways and then start to make this push up. That's where I'm going to want to look to get long going here. After that consolidation, kind of holding Friday's highs or holding that previous rejection as a support, and then kind of working our way back into this supply zone here where I would potentially start to lock up profits somewhere in here, and then kind of wait obviously for Tuesday, Wednesday, Thursday. Do we push out of this zone, back test, and move higher? That's how I would be looking at it. But just know that we are at the top of the range. So if we do have some sort of green open or green day where we kind of just keep on pushing higher here, 442, 443, 445. Yes, there might be an area of opportunity to take a trade here, but just know we are a long ways down from support. So the farther we get away from support, or from the demand zones, the previous demand zones, the harder we could fall if they do decide to pull the market. So just be cautious, if we have some green open. I know a lot of people get excited about the futures being up, going into pre-market. Everyone gets so excited. You guys want to buy here. We kind of make a little higher high. You guys do not sell. And then price action comes screaming back down and you cut your position somewhere here. Just loan to behold, a few hours later, we back tested support and now we started to move higher here. So you kind of got faked out, kind of traps all the bulls that got very eager off of the open. And then the shorts start to cover as we come into that previous level of resistance that's now going to act as support. So with that being said, we just want to see, does this level hold up here, 437.50? If this level holds up here, I'm very confident that we will push up higher this coming week. With that being said, guys, if you guys want to join my Discord, that link is down in the description box below. Also, I do have a section on my Discord for gold members. With gold members, what I'm going to do intraday is things kind of like this. As the trades that I'm taking are playing out, I'm going to give you guys the key zones and levels that I'm looking at, kind of let you guys know what trades I'm taking, when and where. Also, it does give access to intraday live chat with me. The first couple hours of the market, I am streaming my screen so you guys can kind of see what I'm looking at. So it kind of helps with that, education process. Also, I will put out like a daily watch list and signal list of kind of areas that I'm looking for and areas to trade. That's only $19 a month. It is not a subscription service, meaning that you can pay this month. You don't have to pay next month. You just lose access. And whenever you want to regain access, you just rebuy the package. I also do have a trading course that's going to kind of outline everything. It's 22 hours of video. It's going to kind of get you started in becoming a profitable trader. For one thing, learning key levels, support, demand. It's going to also give you analysis on using the moving averages and kind of seeing where we are on the big picture. Also about controlling emotions. How can you day trade? How can you swing trade? How to enter and exit, when to cut a loss, when to take a trade, all that and everything in between. And until next time, guys, subscribe to my channel. Give me that thumbs up. I work very, very hard on these videos. I would love to see myself get to 1,000 subscribers, hopefully pretty soon. And with that being said, I will see you guys all on the next video.